Right now, as we watch the market pulse in real time, the stock price for Nuburu Inc., ticker symbol BURU, is trading at precisely 21 cents. That is $0.21, showing a slight intraday gain of roughly $0.0046, or roughly 2.27% in the green as of this morning's session. Seeing a stock with a revolutionary technology trading for the price of a gumball creates an immediate cognitive dissonance. The expectation for a company like Nuburu, which pioneered high-power industrial blue laser technology, is that it should be a darling of the electric vehicle and aerospace revolution. The narrative is seductive. Blue lasers are physically superior to traditional infrared lasers for welding copper and gold, metals that are critical for EV batteries and 3D printing. Investors look at the ticker and expect a hidden gem, a Tesla of manufacturing, that is temporarily misunderstood. However, the reality is far more brutal. What we are looking at is not just a value play, but a company that has effectively been hollowed out by financial distress, having lost its core patent portfolio in a foreclosure event and is now attempting a desperate, high-stakes pivot to survive. The movement we see today, that 2% tick upward, is the heartbeat of a penny stock reacting to news of a lifeline. Specifically the recent execution of a financial agreement with Tekne, an Italian industrial vehicle manufacturer. This is not a chart of steady growth, it is a chart of survival. To understand why this 21-cent level is the battleground, we have to strip away the glossy investor presentations and look at the wreckage of the balance sheet. Nuburu recently faced a foreclosure sale where secured lenders took possession of their patent portfolio to settle debts. Let that sink in. The expectation is that a tech company owns its tech. The reality here is that while they retained their trade secrets, know-how and engineering talent, the actual patents, the legal shield around their invention, were stripped away to pay the bills. This event fundamentally changed the thesis from investing in a patent moat to investing in a turnaround team. When you buy BURU at 21 cents, you are not buying a patent fortress, you are betting on the ability of the new leadership, led by Alessandro Zamboni, to execute a transformation plan that shifts the company from a pure hardware manufacturer to a diversified industrial platform. Let's pause and look at what this technology actually is, because despite the financial chaos, the physics remain valid. Traditional industrial lasers use infrared light. The problem is that yellow metals, like copper and gold, reflect infrared light like a mirror. You waste a huge amount of energy just trying to get the metal to melt, and this often leads to spatter or defects in the weld. In battery manufacturing, a defect can mean a fire. Nuburu's innovation was using blue light. Copper absorbs blue light 13 times better than infrared. This means you can weld faster, with less energy, and with zero spatter. This is the holy grail for making EV batteries and sophisticated aerospace components. The expectation was that this physics advantage would guarantee commercial dominance. The reality was that building these lasers is incredibly expensive, and scaling manufacturing without running out of cash is even harder. Nuburu burned through its capital before it could reach escape velocity in sales, leading to the crisis we see today. For the individual investor sitting at home, perhaps trading on the Robinhood app or monitoring this on a Fidelity trading platform, the immediate risk is mechanical: delisting. Nuburu is currently trading under a non-compliance notice from the NYSE American Exchange because its stock price is too low and its stockholders' equity is in the red. They are trading with a .BC designation, a scarlet letter that warns investors of the risk. If they can't get the share price back above $1 or fix their equity deficit, they face being kicked off the exchange and relegated to the pink sheets. This would dry up liquidity instantly, making it impossible for Fidelity ETFs or institutional funds to hold the stock. This compliance clock is ticking loudly in the background of every trade. However, we must also explore the pennies narrative that is keeping the price at 21 cents instead of 0. The bull case, or rather the survival case, rests on the new partnership with Tekne. Just days ago, Nuburu announced they successfully executed the first tranche of a financial program with Tekne worth €2 million. This is part of a broader strategic alliance to build a defense and security platform. The idea is to combine Nuburu's laser tech with Tekne's industrial vehicles and defense contacts. This is a pivot away from just selling lasers to anyone who wants them to becoming a specialized defense contractor. We also see glimmers of hope in government contracts. Nuburu was awarded a NASA contract worth roughly $850,000 to develop blue laser technology for power transmission on the Moon. While the dollar amount is small compared to their debts, the validation is massive. NASA doesn't hand out contracts to vaporware. It confirms that the underlying tech, the know-how they kept, is still world-class. For those of you using interactive brokers trading tools to look at the order book, you might see strange fluctuations. This is characteristic of a low-float penny stock. A single large buy order can send it up 10%. A single sell can crush it. The volatility is extreme. This attracts day traders who use SoFi Active Investing to scalp pennies. But for a long-term holder, it is a roller coaster in the dark. The short interest here is less relevant than the dilution risk. To survive, companies in this position often have to issue massive amounts of new stock, which dilutes existing shareholders into oblivion. We saw them do a reverse stock price recently to try and prop up the price, but gravity took hold again. Comment below if you believe a technology company can survive after losing its patents. Is know-how enough? Or is IP ownership everything? Let's look at the burn rate. In their recent filings, the company reported a net loss of over $22 million for the quarter. They have very little cash left relative to their burn. The auditors have slapped a going concern warning on the financials, which is accountant speaks for "we think this company might die within a year." This is the cold water that douses the blue laser hype. You cannot pay salaries with physics. You need cash. The Tekne deal is a lifeline, but is it enough? It buys them time, but it doesn't solve the structural unprofitability unless they can dramatically ramp up sales or monetize this new defense strategy immediately. The comparison to other 3D printing and manufacturing stocks is stark. Companies like Desktop Metal or Markforged have also struggled, but they generally retain their IP. Nuburu is in a unique, more dangerous category. Investing in BURU right now is closer to buying a distressed asset option than a traditional growth stock. You are betting that the shell of the company, populated with smart engineers and a new strategy, is worth more than the current market cap of roughly $90 million. Future outlook? It is binary. Scenario A. The Tekne partnership flourishes, they win more defense contracts, which are high margin, and they successfully recapitalize the business. In this world, the stock could be a 10-bagger from 21 cents. Scenario B, the cash runs out, the NYSE delists them, and the equity goes to zero as creditors pick over the remaining assets. The market is currently pricing in a high probability of Scenario B, which is why it's 21 cents. In summary, the expectation for Nuburu was to be the light engine of the future. The reality is that it is a financial zombie fighting for a second life. The live price of 21 cents is a ticket to a high-stakes show where the company is trying to rebuild a fortress without its original walls, patents. The technology is real, the NASA contract is real, but the debt is also very real. If you are touching this stock, you are not investing, you are speculating on a corporate resurrection. Watch the news on the Tekne integration and any further capital raises closely. That is the oxygen supply for this diver. Would you like me to analyze the recent NASA contract details to see if there are more milestones tied to revenue?